But let's shift focus. Let's talk about the hotel industry. And with woes like demonetization, high taxes behind us, is the tide really turning for hotel companies? Avan joins in with more details and analysis on that.
Aisha, just an interesting tidbit. Sometimes it would be cheaper to fly, to go overseas than to have a luxury destination back home. But things have really changed now. And one of the key reasons behind that is the kind of tax slap cut that we've seen in GST. That's been a big bonanza for the hotel sector. So you'll particularly notice that for the rates for 2,500 to 7,500 and above, the rate has been slashed from previous 18% to now 12%. And even for 7,500 and above, the rate has been slashed by 10% to 18%. So that's a big bonanza. In fact, analysts say that that's going to be a big positive for the sector, and this will help to lower the overall pricing at the customer level. It encourages a lot more demand as well, and it will just help increase headroom for hotels. Just some interesting data as to how things have changed. Now we're seeing a trend where for luxury hotels, particularly in the metros, there has been quite a bit of a boost, particularly in areas like Delhi, NCR, Mumbai and Bengaluru, which have managed to actually buck the trend. So you've seen the pan-India trend that has been muted overall, but some of these luxury hotels have seen a boost. That's largely been on account of the upwardly stable room rates. There's been strong occupancy this year. Of course, that GST rate has further provided a fillip on the expenditure for guests. Operating margins as well have been fairly strong on the back of higher room rates. So all in all, things looking good. What exactly is aiding the momentum? What are the big positives? Well, the fact that it's been a favorable policy environment, number one. Other than that, there's been an increase as well in the number of flights. Cheaper airfares has led to strong demand and people traveling a whole lot more. You've got the peak wedding season as well as the winter holiday season that has helped boost demand. There have been a lot of initiatives from the government as well in order to help boost the overall tourism infrastructure, and the revenue per average room as well has grown by nearly 2.6% over the last year. So things within the sector really seem to be turning tide. Would be better as well to get in a corporate view. The management of Chalet Hotels is with us.
Oh yeah, Sanjay Sethi right here in the studios with us. Sanjay, hi, morning. Like Avan was highlighting, a lot of positives doing the rounds for the sector. How has life changed ever since now the onset of the holiday season, of course, and the festive season? But besides that, post the GST cuts coming in, how different are things for you?
Well, things are clearly different for the consumers. The guests now will have to pay a lot less than they were paying earlier, especially in the upper segment of the hotels. And I think that's going to spur demand. And that's where the hotel companies will sort of get the benefit out of that. We also see a travel increase substantially more because with the flight prices, which had gone up significantly after Jet exited, this saving of 10%, 10% on hotel rates will help people stay within budgets. I think two things have happened. One, we've in the midst of an uppish long cycle. We had some short-term challenges in the last few months on account of the general economic slowdown. That will pass. Second thing is that we are getting into the second half, which typically is a much better half for the industry. In the past, the industry has performed with 56, 57% of the revenue coming out of H2, with the H1 being a slightly subdued quarter for most of the hotel companies in the country. We see this gap being even larger for H2. So we see a very strong H2 going forward for the industry.
Okay, Sanjay, hi, good morning. First up, I just wanted to understand the revenue per average room as well. Mm-hmm. Are you seeing an increase in the trend overall for the sector and for Chalet in specific?
Well, I won't be able to speak about Chalet in specific, but yes, if you look at the trends for the last 2 or 3 years, we've seen a steady growth on the RevPARs, which is revenue per available room, driven in the early part of the cycle by occupancies, but in the later part of the cycle by the rate growths. And that is going to continue on the back of a favorable arbitrage between demand and supply. So what we've seen in the last few years is demands outpacing supply by quite a margin. Even in the subdued Q1 that we had, demand outpaced supply. Demand was somewhere roughly around 4.8% growth. Supply grew at about 3.6%. We expect that to be far better in the coming years. Supply doesn't come overnight in our business. It's brick and mortar. It takes time to build those hotels out. And we see hotels getting built between 5 and 7 years, especially if you look at the higher end of the segment. And therefore, we believe that we've got a good 5 to 6 year run ahead.
But tell me, amidst all this economic slowdown, which we continue to persist in the midst of, are you seeing tier 2, tier 3 cities as such take a hit? I mean, is business slower than usual outside the metros?
Not really. I think India's domestic demand is very strong. And a lot of the travel happens to tier 2 and tier 3 cities. Tier 1 cities get a lot of the top companies that need to travel for business. Similarly, tier 1 cities on leisure side see a lot of leisure travel happening from the higher paying individuals. However, the tier 2 destinations on leisure and business have been picking up pace over the last 4-5 years. And we see that going northwards as well. However, the margins are the strongest in the tier 1 cities because the rates are very different right there. And certain costs are fixed whether you're in a tier 2 city or a tier 1 city. Payroll, for example, we are people-intensive business. And that's why we prefer tier 1 cities from our perspective. We also believe that strong business-driven markets are safer to be in. There's less cyclicity in that.
But because of the slowdown in the economy, has that sort of dampened or gotten soured at all?
So we did see some amount of impact in Q1 of this year, and I think I spoke about these numbers last time I was on the channel, that the growth wasn't as we expected it to be, but there was growth. And in spite of an economic slowdown and the headwinds that the country as in general is facing, the hotel industry has been able to brave it very fairly well.
Do you think enough has been done from the government standpoint in order to boost the tourism infrastructure, e-visas, etc.? Does more need to be done on that?
I think government's done a fantastic job on the rate cuts first to begin with, right? And there has been a lot of initiative on promoting tourism to India. We've had some great campaigns that have helped. We've seen a lot of delegations go out, bringing in business. All that helps. What I think is a gap and where we need to do a better job is today tourism combined together. Tourism and hospitality delivers about 9% of the GDP for the country. We spend 0.1% of the country's GDP as expenditure towards this industry. We need to up that number. To give you a reference point, Thailand spends about 0.4% of its GDP and China 0.5% of its GDP towards tourism promoting activities. So we need to take our spends on tourism 4 to 5 times up from where we are today.
Okay. Are you developing other non-hotel assets like commercial, office, real estate, and some of the land parcels? And what have been the real estate development costs?
So I'll keep the real estate development costs out because then I'll be talking numbers. As we've shared and it's public knowledge, we have some non-hotel assets. Roughly around 15% of the revenue comes from non-hotel assets. It helps. Being in an industry which is cyclical, if you have some steady income assets, and especially if they're built on the same land parcels, so therefore there's no additional real estate cost on it, it helps spread the asset better. So you are actually optimizing returns from that asset by spreading your risk across asset classes.
Okay, but without delving into numbers, would you be looking at more such models, adding to the kitty of your commercial real estate pool?
Let me put it like this. Wherever we have opportunities on the existing land parcels or land parcels that we may acquire sometime in the future, and we have put in enough rooms that the market can take, we wouldn't like to leave FSI or FAR vacant. We'd like to sweat the asset. So we'll develop what can be complementary assets to the business. For example, when you do an office building in a hotel complex, it becomes a demand driver for the hotel. When we do, say, for example, F&B outlets in a hotel, we need to build less restaurants and thereby convert an operating cost into an operating yield, rental yield, which is far better in terms of returns.
Okay. Just want to understand from you as well, going forward, what is the outlook for the hotel industry moving into 2020? Of course, this GST rate cut has been a big boost. There's been upwardly stable room rates and occupancies. Are things looking up for the sector?
I think they are. Leaving aside, as I said, the short-term blip that we've had, H2 should be a very good half for the industry. We expect next year to be a very strong year, given that everything would have stabilized on the taxation and corporate tax benefits will start kicking in. So all of that combined should yield much higher returns. For example, a lot of the corporates, and we are largely a corporate-led hotel company. If their taxes are coming down, they're able to free up a lot more budget for travel. And they need to travel for growing their own businesses. But it's a cycle that is helpful.
All right. Thank you so much for
Thank you.
joining us in our studios and sharing with us the outlook for Chalet, as well
Thank
as
you for
giving us
having
an all-round perspective as to how things are looking from the hospitality point of view, and taking cue from what Mr. Sethi said, that barring the short-term blips, it is looking fairly positive for the hotel industry.